What's up, traders, and welcome back to M.I.C Forex. It's been a while since we did our last video. I think almost 3 weeks now, but we are back to continue giving free education, free videos so that you can really watch and try to improve on your Forex experience or Forex journey. Now, today, I want to take you through. Last time, I think the last video was about double tops, so today I want to take you through double bottoms. Double bottoms is just, the opposite of double tops, so today we'll be talking about double bottoms. But before then, if you are finding these videos very helpful for your trading, please consider subscribing, giving a like, turning on the notification bell, so that when we have a new video up, you'll be the first one to watch it, and also to leave your comment there so that we know what exactly we need to bring you in the next video. Again, I will also continue to encourage you to trade with the best broker in the world, best in terms of spread management. There's no off-market spread, there's no slippage. You just need to have a good broker, and I'm going to be putting a link below my in the comment section, so that when you find it, just click on it. You can open your account there. You can start trading from 0.0 spreads, and there's no commission on trade, and there's no swap fee, especially for those traders who are swing traders. Also, deposits and withdrawals are instant. There's also what we call instant execution on trades, and that link is going to be available in my comment section, and you can open your account from wherever you are. It's a global platform, so you can open. It's not only restricted to my region, so you can open your account, or you can trade with my broker from all over the world. Now let's go straight forward to double bottom. As I said earlier, double bottom is going to be the opposite of double tops, and so I'm just going to be giving very brief notes on this. This is part of the patterns in Forex trading. Or remember, when I was introducing the double tops, I said if you have not watched, you can go and watch it. It's in the list up there. So I said double, whenever you're talking about double activity in the market, initially we talked about double top, so today is going to be double bottom. So we said we're going to be having something like this, and then you expect something like this. In other words, double bottom will encourage, or it's a sign that will give us buying opportunities. So I'm going to be explaining this illustration in depth. So before that, let's take some small or little notes here. So double bottoms. So this one is a pattern that we consider in price action when it comes to Forex trading. So let's start now our discussion in depth. So for double tops, I have said that we are going to be encouraging, or we're going to be looking for opportunities to buy. So whenever we have double bottom, it's an opportunity for us, to look for buying opportunities. But before then, let's look at what we call the SOP. SOP is standard operating procedure. Number one, you consider markets. Remember, I'm a day trader, so I consider markets, or I analyze my markets in 1 hour time frame. So consider charts, or the markets. You just call it market. Consider your market in a higher time frame. And this is going to be 1 hour time frame, 1 hour time frame. So number two, identify and mark two equal lows. Two equal lows. And I said equal doesn't mean the exact point. Equal means within the same region, within the same range. So identify and mark two equal lows. So let me do the illustration as we write the note, so that you don't get lost. In this case here now, this is going to be my low 1, this is low 1, this is low 2. So we are going to be identifying these two equal lows, like that. Let me change this color maybe to which color? Okay. Yes, something like this. So we have our two equal lows here. So here we have equal 1, low 1, low 2 at equal 1. Sorry for that. There's nothing called equal 1. Okay, so we have said that we are going to be having low 1 here, then low 2. So sorry for that. I think I'd lost some connection, so that's why this video was a little bit paused. So now we continue. So we have our low 1 here, then low 2 at this point. So you identify and mark two equal lows, that is low 1 and low 2. The next thing it is to mark the neckline at this point. Mark your neckline. So the neckline is at this point. Wait for and 4 to break the neckline with the body of the candle. Wait for and 4 to break the neckline with the body of the candle, and the breakout is at this point. So this is now our and 4. This one H1 to mean and 1, and 2, and 3, then and 4. It breaks the neckline at this point. What do we do next? Number 4, it is to it is to wait for. Number 5 is to drop to lower time frame, and then you wait for confirmation so that you can be able to take the trade. You wait for confirmation so that you can be able to take the trade. So you drop to lower time frame for confirmation, and then number 6 is to wait for price to retest the neckline. After the breakout, now you expect, or you anticipate that the price is going to retest the neckline. When the price retests the neckline at this point, now what do? You wait for rejection candle or bullish engulfing candle to take your trade. You wait for rejection candle. For those who have not watched my earlier videos, I have described what is a rejection candle, what is a bullish engulfing candle pattern. So you can go back there, and then you can watch it for yourself, and it's going to be very helpful. So for double tops, that is it. You have to look for this particular pattern. So the NB here, or the point to note, is that double tops pattern we look for buys or long position. We look for buys or long positions. That is what you need to underline. That for double tops, you need to look for long position. You need to look for long position, and when you find a pattern like this, then it has a neckline. You wait for the price now to break above, then you retest it, then you look for buying opportunities. When you go to smart money in the future videos, you'll be surprised to see that this is the same pattern that we use even for smart money, but totally different concept, totally different terminologies and terms, but the criteria to take the trade is just the same. You just need to spot where your entry is, and boom, you are in and running in profits if you have a good setup, if you have a good. So let's now just go to the real market and then try to see our examples. Something else that you need to mention here, and actually put it as a note, is that double bottoms happens around the major reaction points. So they usually happens around the major reaction points. That is what you call the turning points. They usually happen let me just put, give you the whole sentence. Double bottoms usually, or the more or the higher probability, I think that is the point actually. Higher probability double tops, higher probability, double tops usually happen at the major reaction points, or the turning points, reaction points or zones. I think the correct one would be zones or turning points. When the market is turning, then if you spot a double bottom there, then take a buy with full confidence, knowing that that if that is a major reaction point, then it's going to be very important or higher probability setup for you to be able to take a buy, for you to be able to take a buy, So high probability double bottoms usually happen at the major reaction or turning zones. So let's go to the the real market. This is Euro JPY or EJ. Then we can be able to look at the examples at that point. So the first thing is to be able to identify the market structure. Remember, that is the first thing that you need to do as a trader. You must be able to identify the market structure so that you can know where are the major reaction points. Because you see, this one was a bullish run. The market was really bullish from this point all the way. So this one is, if you can consider this one as a downtrend, then there is where we have the major reaction point. So let's look at these reaction points at this area here and try to see if we can be able to find what you're referring to as. Let me add the watermark so that you are not lost. That is it. Also add the grid lines. All of them. Yes, I think now it's easy to identify really what you're doing. So the major reaction points are on this area. We cannot spot. There's no double bottom there. But for those who are asking about the double tops, you can see this high and this high, then the neckline, the market breaks, then you take a buy there. But our interest today is a double bottom, so let's just look for double bottom. Let's look for double bottom. Actually, there's none there. These patterns are not very popular. That is why I usually encourage people to study. Not that they are not profitable, but they are not. You cannot spot them every day. Maybe once in a while you can be able to spot them. So when you see them, you can take a huge advantage of them. Let me look at 30 minutes and see if this one could make sense. Where were we really? Even this one is not very convincing. Let's go to maybe Euro NZD. Let's see if we can. Some of these pairs, just trade them so that you don't get stopped out. Especially if you are trading XAUSD. Remember, it's a very volatile pair. Something that you need to be very keen when handling it. Why not? Can't see any here. Not very convincing, the one that I can spot. I'll just give a brief overview of this one, but I'll still continue to look for a very good example. So this one, you can call it, your two equal lows. Remember I said an equal low or equal high doesn't mean you don't expect the market to return exactly at that point, so that you can call it equal low. But this one is within the same zone. Is within the same zone. So that is our two equal lows. So this is the criteria. And that's going to be my neckline, this high here, or this candle. You mark the whole candle. That is my neckline. So this is where I'm going to be identifying the breakout, the body of the candle. Remember, you can see when the market came here, it continued to dance here for almost a day, actually a day plus, from 25 to 20, almost like 2 days. So this is where the candle gives a break, this blue candle here, and then the retest. So this is where I could take my buy at the retest there. That is where I could take my buy, then expect that. But let's have a proper example. Let me look for a proper example so that you don't get confused, or I don't give example that are misleading. You need to get a proper example. Oh, sometimes I was here teaching something. I don't know what it is, but this one must have been a very good setup. This one was for liquidity. If I'm not wrong, this one is liquidity. So let me just clear everything here, and then we continue looking for example. Or I go to 4 hours. Go to 4 hours. That could give that's a very good picture. Really difficult. Let's look for reaction points. For those who are asking what broker I use PU Prime. I use PU Prime. So you will find my link on the comment section. Let's look at this. Very good to equal lows. So for the neckline, I'll mark here. I'll mark this one. I'll mark that one. Then this is a breakout, the retest, although it went so low, but then the bullish engulfing candle happens at this point. So you could check your buy at the close of that candle there. It's very easy. Just as easy as taking T. Alright, then put your stop loss here. This is enough money that can help you to pay your dowry. I'm just kidding, eh? So you can pay your dowry using this particular setup here. So this one is low 1, low 2, neckline, breakout, retest, then bullish engulfing candle. At the close of that candle, you can take your trade at that point. You can check your trade at that particular point. So that is a brief discussion on double bottoms, a pattern that is not very popular. I mean, you will not be able to see it every day, but once you spot it, it's something that you can take a trade in it, and something that you can you can really want to understand, to be able to take a trade there. And I'm very sure that if you take if you take keen, or if you are keen on my explanation, it's something that when you backtest it, you are able to make enough profits out of it. Remember, the goal is to continue improving and improving. Thank you very much for watching my video. My name is M.I.C. You can also catch me on TikTok as M.I.C_Forex1. Of course, this is our YouTube channel. I'm also on Facebook, and I'm also on Instagram as M.I.C_Forex. So thank you very much one more time for your time. Consider opening your account with that broker that I'm mentioning, that I'm going to be putting the link below here. You can trade from a 0.0 spreads, and expecting no slippage or off markets spread when we are having news. You can also take part of competitions, especially during CPI and NFP, with your prediction, and stand a chance to win your prize, which can be converted into trading capital. Thank you very much. See you on the next one.